All right. We are recording. It is Tuesday before exam 2. Exam is scheduled for tomorrow, November 20th. However, the campus is closing at 2 o'clock today. And if the campus is closed tomorrow, we will have to reschedule this exam. Hopefully, we'll have our exam tomorrow. All right. So I want to share my screen. All right. Can you guys see? Which screen am I sharing? Do you see the practice exam?
Yes.
Is it very big? Screen 2. Is it big? Is it filling the whole screen?
Yeah, I think it's good to see.
Okay. All right. So we've got 2 other students that have a project question. So as soon as they sign on, I'm gonna answer their project question, and then we'll go back to the practice exam. But this exam is journal entry intensive. There are 25 journal entries you need to know for this exam, okay? So, can you still see me? I hope you can. Yeah, okay. All right. So I always say to students, before you start the practice exam, which you have all done, before you start it, review my PowerPoints, look over the chapter examples, look at the end of chapter sample problems because they come with solutions, and be sure to do your practice homework. You've got 7 adjusting journal entries, 4 closing journal entries, 7 perpetual journal entries for purchases and sales, and you've got 7 periodic journal entries for purchases and sales. So that is 25 journal entries. That's a lot. Okay. This is the most intensive journal entry exam we have in the quarter. Okay. So you need to know them. Know what gross profit means, earnings per share, net income percent. I got that twice. I don't know why.
What is the formula for earnings per share?
So I will provide the number. You just need to know what it means. So earnings per share is where you look at net income minus preferred dividends, and you divide it by average shares outstanding. So what you're saying is how profitable is the company per share of common stock? Okay. So you want that number to be high, Monica, so that the higher the better, right? You're making more earnings per share. So net income percent is net income divided by net sales. Gross profit percent is gross profit divided by net sales. Okay. All right. So lots and lots of journal entries. Okay. So I have a chart of account here. It will not be provided, but it's just to give you an idea of all the accounts we've learned so far. So Emily was asking me yesterday, what's the last asset account? So can you guys tell me what the last asset account is? This chart of accounts in order. So you can look at that. Okay. If you just joined, we're taking a look at the practice exam, and we've got a list of accounts. And my question to you all is cash. This is in order: assets, liabilities, stockholders' equity, revenue, and expenses. Cash is the first asset. What is the last asset? Throw it in the chat. And you don't need to direct message.
So just Canvas inbox it.
Sorry? Who is Sigma? Sigma, who are you?
Oh, I'm sorry. I'm not sure why my name appeared as Sigma. So
Oh,
I
hi,
have Zoom on
Alaric.
my
Okay.
I have Zoom on my phone. This is Alaric.
No worries,
I'm
no
not
worries.
sure if I'm able to. Yeah, my bad.
You can participate, and then we'll take a break and we'll answer your questions. So,
No worries.
So cash is the first asset. What's the last asset on this list?
Would it be building? Does the accumulated depreciation count?
accumulated depreciation is the last asset. It's a contra asset, but it's still an asset. Okay. So what makes it a contra asset is all the other assets have a normal debit balance. Contra asset has credit balance because it reduces the building. Okay. First liabilities accounts payable. What's the last liability on my list?
Taxes payable.
Great. Okay. Common stock, first stockholders' equity, and income summary. And dividends and income summary, we don't use a lot in Accounting 201, but we do use them. Revenue account sales, last revenue account sales discounts. Oh, sorry, interest revenue. And then all the rest of these are expenses. Okay. And if you are a perpetual system, you won't have these purchases, purchase returns, purchase discounts, and freight in. You'll always just use inventory. But these four are only if you have a periodic system. Okay. Also notice that the assets are in the 100s, the liabilities are in the 200s, stockholders' equity 300s, sales 400s, and expenses.
I have a real quick question. What's
Yeah.
the difference between freight in and freight out? Or when do I use in and out?
Freight in, we use when we buy something and we bring it in, and it's part of the cost of inventory. Freight out is when we ship it out to a customer. And we say, this is the cost to go out to a customer, and it's part of operating expenses. So we don't attach it to the inventory cost. It's an additional cost we pay to ship it to a customer.
Yeah,
All right.
thank you.
So Alaric and Bryson, do you have a quick question? Or Alan, do you have a quick question?
Yeah, so really quick, we had two simple questions regarding the project. The first one was, I don't have it, well, I have it pulled up here, but I'm not sure if I can share it.
Oh, let's see. Hang on. You
I'm
should
gonna
be
go
able
like,
to share. Try now.
yeah, so first thing, disclaimer, I'm using my phone because my computer camera does not work, but I can just flip the screen and have it.
Perfect. Do it.
Yeah. I just need this one. There we go. Can you see that, Judith?
Sure. What's your company?
Columbia Sportswear Company.
Got it. Okay. All right.
All right. So the quick question we had was with regards to finding net sales, do I just take the first account right there, revenue from contract with?
Hang on. Let me pull it up.
Because we just want to make sure that we have everything in order.
So read
And
the
that we're using the right
actual- read
numbers.
Read the actual number.
For December 31st, 2023, $3,487,203.
Okay. And read the second line and its title.
The second line is cost of goods and services, $1,757,271.
Okay, so what you have there is a case where they're not using normal language like you've learned in accounting, but that revenue line is your correct total sales line.
Okay.
And that second line, cost of goods and services, is the same as cost of goods sold.
Okay. Gotcha. Sweet. Thank you very much for that.
You
Now,
bet.
our second question is, and this is something that Alan pointed out, was with regards to the years that we have for both companies. So as you can see here for Columbia Sportswear Company, on their income statement, we have 2023, 2022, and 2021 as our three designated years for the trends and for the statements. But for the GAAP Inc., we have 2024, 2023, and 2022. Now, while you did say that our financial statements were approved and that we can move forward with the second part in making, the statements for this project, Alan wanted to ask if it would be best to just use last year's statements for GAAP.
No.
Okay.
So use the statements you got. Your statements are only like a month apart. So if you look at Columbia, their year end is December 31st, 2023. And the GAAP is February 3rd, 2024. So they're comparable statements.
Okay.
All right.
Gotcha.
So we always want to use the most current statements for each company. Sometimes it doesn't line up perfectly, but that's okay.
Okay, sweet. Did you have anything else, Alan? No? Okay. I guess that's just it, Judith. Yeah.
All right, have fun.
Mhm.
See you later.
Yep, likewise. Take care, guys.
Okay, bye. All right. So any questions on the accounts? We got freight in, freight out. So as you're working through those 7 journal entries in, so I want to go back to this. As you're working through these journal entries, make sure of 2 things. One, you recognize the journal entry and you know which of your studies, which of your sample journal entries from your homework you're going to use. So let me take an example. The 7 adjusting journal entries, if you go to my PowerPoint slides somewhere, there they are, for chapter 4, because we're doing that first. I give you, we have 7 different types of adjusting journal entries. We have 4 under the category of prepaid and 3 under the category of accrual. Okay. So the 4 under prepaid involve supplies, either prepaid rent or prepaid insurance, equipment, and unearned revenue. So they're prepaid, they're already on the balance sheet. And now we're saying, hey, are those balances correct, or do we need to do an adjusting journal entry? So what I want you guys to be very comfortable with is the 7 adjusting journal entries. So the first one we learned in our PowerPoint was the supplies adjusting journal entry. Supplies expense, supplies. Second one involved prepaid rent, rent expense, prepaid rent could just as well be insurance expense, prepaid insurance. So just read the problem. And then for depreciation, depreciation expense, accumulated depreciation. And then finally, for unearned revenue, we reduce unearned revenue, which is a liability account. So we reduce it with a debit and we recognize service revenue. Okay. So if we look at the practice exam, what I want you to say is, okay, first one, which one are the 4 prepaids? So the first one involves interest. So we haven't, that's not part of the 4 prepaids. Second one is supplies. So I want you to know, oh, that's the supplies adjusting journal entry. I know the account, so go ahead and write it on your test. Supplies expense debit, supplies credit. So your strategy for this chapter is know the journal entry as far as what account is debited, what account is credited, and then work on the numbers because you have to do some calculations often for the numbers. Equipment was purchased, depreciation is booked annually. You know the journal entry, depreciation expense debit, accumulated depreciation credit. Okay. Lock-free paid for 12 months of insurance. And you get some clues up here. Here's the equipment account. Here's the supplies account. And here's prepaid insurance. So we know that journal entry. Debit insurance expense, credit prepaid insurance. And let's see, on December 1st, they collected money for consulting services to be performed for the next 5 months, December 1st through April 30. Assume an equal amount is earned for each month. Okay, that's a case where when the customer prepays, we debit cash and credit unearned revenue, and now it's time for the adjusting entry. So we're going to reduce unearned revenue with a debit and credit service revenue. All right. So the other 3 types are the accruals. And the first accrual is where we say, hey, we performed some service, we get to count the revenue. What's the point of that? Why do we do that? We do it because when we create that income statement, it has to show all the service revenue that the company earned in the month, in this case, of January. If we don't record the revenue that we earned in January, we're understating revenue. So we want to get that entry in. The other ones are a little more complicated. We have the payroll one, but the journal entry is straightforward. Salary and wage expense, salary and wages payable. And then the last one involves interest, interest expense, interest payable. So for none of these, there's not an original entry, but these are the accruals. Okay, so back to your practice exam, lock-free borrowed 20,000, signed a 12% note. That's going to be the interest expense journal entry. Let's see, down here, lock-free performed consulting services. The client will be billed. That's going to be your accrual to recognize that revenue. And then here's the salary one. So don't be overwhelmed by these journal entries. Know the journal entry, then go back and do the arithmetic to figure out the dollar amount. Okay. So when you guys, so I'm going to skip the closing one because we're going to run out of time. But I want to look at this journal entry. Okay. So I'm going to put up the solution for this. Does anybody have any specific questions about the practice exam? Any other specific questions? Oh, Monica, I see your question. Will the exam have us create T accounts? Yes, but only very limited, just for a couple of accounts. Okay. So I typically like you to know the T accounts related to closing journal entries. What happens to retained earnings? What happens to income summary? And then the other possible T account is with cost of goods sold, so with periodic. Okay, so what I want you guys to do, first thing you need to do is I want you to highlight, this is now chapter 5. I want you to highlight, let's see if I can do this. Maybe I can. Yeah. I want you to highlight what inventory system are we using. In this problem, it's all perpetual. So that's chapter 5. If we were doing periodic, that would be appendix 5A. Okay. So when I looked at your practice exams, you all got the first 3 really good. Purchased windows, returned windows, paid the balance. Okay. So let's just look at that. Here we go. So those first 3 journal entries, both the online class and the in-campus class, most of you got that. Purchased, it's perpetual. So all of that goes to inventory. That's how we do it. Return, we reduce the inventory. And then when we pay the bill and we get that discount for prompt payment, that's also a credit to inventory. So the cost of the inventory was $1,000 minus the $100 return. That gives us $900 and minus the purchase discount of $27. So that leaves us with $873, I think. We'll hope so. Okay. All right. Where you guys got into trouble was in the sales transactions. Okay. So let's go back and look at the prompt there. Okay. Are you guys able to see my practice exam?
Yeah.
Okay. Just making sure. Okay. So Kai sells the 5 windows. The customer returns 2 windows and pays. Okay. All right. So Kai sells 5 windows, $250 each. So what a lot of students did was they said, hey, here's the sales transaction. Accounts receivable sales. 5 times 250 is 1250, but they didn't know what to use for cost of goods sold. So cost of goods sold is determined by that earlier purchase. Okay. They bought 10 windows at $100 each. So that's what you use for cost of goods sold. The customer bought 5 windows. The company sold 5 windows times 100 is your cost of goods sold and your reduction to inventory. Okay. Then the customer returned some windows. Okay. Sales returns and allowances. Don't debit sales. Debit sales returns and allowances. And then you reverse that inventory and cost of goods sold for the 2 windows at $100 each. Okay. And then the customer pays. Now, at this point, the customer had owed $12.50, but they returned $500, so they only owed $750. So there it is, accounts receivable being reduced $750, and you apply that 1% discount. I've rounded it to $8, but it's really $7.50. And you guys can round it if you would. If you don't want to, that's okay. Okay. And then the last part of this is Kai receives a freight bill for shipping to Kraft and pays it. Now, why would the seller, Kai is the seller in this case, the seller pays the freight bill when it's FOB destination. So that's why they're paying it. Okay. So debit freight out because you shipped it to a customer, the company shipped it to a customer, and credit cash. Okay. So just be sure you get, now this problem was a little tricky in calculating cost of goods sold because you had to know you bought it in an earlier transaction. You can also get a problem where it says you sold this window for $250 each. Cost of goods sold is 60%, in which case you'd have to calculate it. Okay, or 40%. Cost of goods sold is 40%. Then you'd have to calculate it. Okay, so just be mindful that you may have to do a little more work figuring out cost of goods sold. Any questions about perpetual? Okay. All right. And you can follow a lot of these journal entries also on my PowerPoint slides. And what I would say is, even now, I would make a list of them, read the prompt, and practice the journal entry, and just until you're really comfortable with it, just like learning Spanish or Arabic or any other language. You just need the practice. Okay. So I want to contrast this with periodic. And be sure you know which is which. Bring a highlighter to the exam. Hopefully we'll have the exam tomorrow. And know the difference between how these work. So we'll look at those solutions here. Let's see. All right, so first one, Martinez places an order. There's no exchange when you place an order, so it's a no entry. On February 5th, Martinez takes delivery of the doors. Okay, now we have an exchange. They've received the doors. So 15 doors at $100. That's $1,500. And this is periodic. So we don't use inventory except once a year when we count inventory. We use purchases. The accounts payable is the same as perpetual, but we don't use inventory, we use purchases. Okay, then now we're intermingling purchases and sales here. Kraft Builders purchases 10 doors, and note that that's a higher price there than the 100 that we bought them at. 10 doors for $350 each. So here's accounts receivable, here's sales, but it's periodic, so we don't have cost of goods sold and inventory like we do for perpetual. Okay. Now Martinez turns around and says, hey, some of those doors were defective. I want an allowance of 10%. Seattle Door gives it to them. So let's book that part. These are two transactions in one journal entry. So let's show it as two. Accounts payable, purchase, returns, and allowances. So a return is when you ship it back. An allowance is when the vendor says, just take 10% off your bill. So they did that. Okay. All right. They originally owed $1,500, but they got a credit of $150. So the company Martinez owes $1,350, and now they're going to pay their bill. Accounts payable gets wiped out, but they get a purchase discount, and the purchase discount is 2%. So they're going to apply that 2% to the $1,350, not the $1,500. And then they're going to subtract it. Okay. On the exam, can we shorten returns and allowances to R and A? Absolutely, but don't just call it R and A, because you need to put that purchase. So you can say PURCH, perch, R and A. And then down here, you can have sales, R and A. That's fine. Okay. All right. Now here I have a beef with transaction 6 because they combine 2 entries in one, but let's look at it. Okay. Kraft returns 1 door and pays its invoice from number 3. Okay. So they had originally purchased, Kraft had purchased 10 doors, and now here they're returning 1 door. Okay. So there's the 3,500, but we're going to debit sales returns and allowances to reflect the return. Now, the customer does not owe us 3,500 anymore. They owe us 3,150. So less than that, okay? Because of the return. So we're going to apply that 1% discount here, and that's $31.50, and then the balance is cash. You could have done that as 2 transactions, one for the return and one for the payment. It would all work out to the same, okay? Now, at this point, you have a lot going on. You have to true up your inventory. So what I like to do is I like to show it on, a T account. Let's see if I can do that. Hang on just a sec. I'm going to see if I can bring that up. Review sessions. See if I have it here. All right, we'll make it work. Okay. All right, so what I like to do is I like to set this up and show the T accounts. You know, Monica, you asked about T accounts. This is not required, but it does make it a little more helpful. So I'm going to set up T accounts for purchases. And I might get kicked out here because it's getting on to 2 o'clock, but we'll give it a shot. And purchase RNA, purchase discount. Okay, so I've set up 3 T accounts. Let me show them to you here. Okay, now can you see those T accounts?
Second.
Yes? Yes or no?
Yes.
Okay, thanks, Monica. All right, so I'm just going to post just to show what's happened here. So in my solution, I had 1,500 debit to purchases, so I'm going to put that there. And purchase returns credit 150. And then purchase discounts, I'm just going to round it to 27, okay? So that's what I wanted to show you guys, because I think it's going to make this next journal entry a lot easier. Okay, now we also have the inventory account. And remember, I said we don't touch inventory but once a year. Okay, and we do it after we count physical inventory. Okay. So the problem tells us beginning balance 15,897. Okay, hang on just a sec. Mira? What's it look like outside? Okay, I'm gonna leave in about 5 minutes. Okay. All right. It's starting to blow. Okay. So here's our balances right now. Okay. And this is important because this is going to help you make this last journal entry. Okay. So we have to update cost of goods sold and ending inventory. So it's telling us here end of month inventory is 16,129. Okay. So my goal is to get this ending balance to 16,129. Okay. So I need a journal entry to help me do that. So I'm going to put a thing there to show me that I need a journal. I need to build a journal entry. I also need to make this go to 0. I want to all of these, because these are temporary accounts and I want them all to go to 0. Okay. So I need a credit here. I need a debit here, and I need a debit here. Okay. All right. So let's look at the solution. The solution is going to involve debit 27, and I know that because I've got a balance there. And then when I balance this T account, it'll be 0. A debit to purchase returns and allowances, and when I balance that T account, it'll also be 0. And I need a credit to purchases, and that'll make this 0. And then I need to figure out what I want here to get it. And I need a debit of 232 so that when I combine it with my beginning balance, I'll end up with 16,129. Why do I have to have 16,129? Because that's what we physically counted. Okay. All right, so that journal entry is right here, 232, 150, 27, 1,500. And the difference is cost of goods sold. You can do it the long way, beginning inventory, and you will need to know how to calculate cost of goods sold, plus purchases, less purchase allowances, less purchase discounts equals goods available for sale.
I'm gonna close the door.
Thank you. Minus ending inventory equals
Be
cost
safe.
of goods
Go
sold.
home.
I will. All right. All right. Okay. So that is a big fat entry, but I wanted to make sure you understood. The only thing missing from this calculation, because we didn't have any, if you had freight in, you would also add it here before you subtracted ending inventory. All right. Okay. So the other areas that I really want you to know is how to do a multi-step income statement and know the difference between operating expenses, know how to do the subtotals versus the other income, which would be interest expense, interest revenue, any gains or losses would be other, minus your income tax. Okay. As far as this is concerned, know how to write about trends and whether things are better or worse. Okay, I don't have time to go into that. And this is more adjusting journal entries. And I would love to spend more time, but I am being kicked out. So anything else I can do for you guys?
No, that's it. Thank you for your
All
time.
right. Feel free to email me if you have questions and I will post this video. All right. You guys take care. All right.
Great. Thank you. Have a great day.
Bye-bye.